Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. We have a panel for you today talking about our favorite subject on Trade Talks, cryptocurrency. And joining me, we have Alex Mashinsky. He's the founder and CEO of Celsius Networks. Mike Alfred, he's the co-founder and CEO of Digital Assets Data. We have Hugo Renaudin. He's the CEO of LGO Group. It's great to have you back with me, as always, gentlemen. And before we get into what's happening with cryptocurrency and Bitcoin and how it fits into the volatile equity and bond markets, let's talk about the future of banking and investing in commerce, how we're seeing that shift with institutions and consumer habits. We'll start with you, Alex.
Yeah, I think there's definitely adoption. Celsius is working with 212 different institutions. So we're seeing them treating crypto or digital assets as another asset class. They all have desks for it. They all have people dedicated to trade in that asset class. I don't see them investing. I see them more trading. But it's doubled since last year. So definitely seeing a lot of new action.
Yeah, particularly on the institutional side, even with government, you have Canada coming out with the new stablecoin QCAD, of course, and even our Fed Chairman Powell has commented on the fact that we have to be aware of what's happening with digital assets. And Mike, you and I have spoken about this, that the growth that we're seeing within this space is consumer habits are changing.
Absolutely, and obviously Bitcoin was really the first kind of proof point that a decentralized system like this would really work. But going forward, we think stablecoins more broadly are going to be one of the centralized ways that you see this sort of space flourish over time, and also DeFi, right? So we're really excited to see, like, if you look at Compound, right, over the last year, it's grown 8x to 160 million. You look at synthetics, it's gone from basically in 1 year from 0 to 120 million. So a lot of excitement about this space. There's going to be a lot of bumps in the road. There's going to be hacks. There's going to be bugs. But ultimately, this is all going to become the underpinning of sort of the next wave of infrastructure.
So when you talk about DeFi, it's decentralized finance, of course. How is that different than as we know it today?
Well, I'm not the expert in this. I'll let one of these other guys take that. But the one thing I will say is that when you remove that single intermediary that drives all the decisions, I think it's a better system for everybody.
Yeah.
You basically have three horses. It's a three-horse race, right? You have the governments, like you mentioned, the Chinese government, the Canadian government, even the US government kind of announcing, hey, we're going to create these stable digital coins. Then you have corporates like Libra or JP Morgan, and then you have the open internet equivalent, which is the open blockchain. So DeFi is the decentralized finance version of the public internet, right? And you're seeing many companies, Celsius, Compound, others, creating products on top of it that are designed to act in the best interest of the community versus in the best interest of a central bank or the best interest of a corporate interest. Right. So these are the three kind of like different options, and the users, the people actually have the assets, have to decide who are we voting for. Do we want central banks? Do we want corporate solutions? Or do we want decentralized solutions?
Yeah, because Hugo, the technology exists that's out there, and it's an interesting question. Theoretically, with the technology that exists, you don't even need an intermediary. Like, why do you necessarily need a broker? Take away the community part and the education part of it and so forth. But in theory, you should be able to go onto an exchange and trade your asset.
I think you always need some kind of centralization. Just if you look at the smart contract, the way it works, you need to trust someone. You need to trust the person that coded the smart contract. And I think what's interesting about DeFi and the cryptocurrency space in general is that you are the intersection between the traditional financial world with traditional hedge funds, and we were talking about that just before the panel. You have traditional hedge funds that trade this asset class, and they use the same strategies and the same connectivity that they've used for ages. And on the other side of the spectrum, you have people that have worked in tech companies, that are doing algorithmic strategies that come from this very tech world. And so if you look at the ecosystem as it is today, it's very interesting to see, and I think a lot of things that are being developed today, especially on the DeFi world, is going to be at the core of what the next layer of infrastructure on the financial market will look like. And what we try to do, LGO, we try to bring to our institutional clients the capital market services, but in a more tech manner, right? So we have a platform. Our clients, they do everything the way they used to do it before. They trade, they finance themselves, they do OTC trade with us. But everything is fully electronic, and we use technologies like blockchain and cryptography to help ensure that their experience is better than they would have.
Do you think this will ever trickle down to the everyday consumer, where they'll be doing their banking in a more decentralized manner?
That feels inevitable to me, right? So I think ultimately what happens is all these technologies that we talk about in very technical terms today fade into the background. And at some point, a decade or 15 years from now, right, consumers are using all of these platforms in a way that is very, very easy to use, right? And that's what folks like Alex are trying to do, right? Take something that could be complicated for the average person to do today and make it super simple. And that's sort of what Coinbase did, right? It's what AOL did for the internet. And as you have more and more of these services, you won't know what's underneath it, you'll just know that it works.
Yeah, like DeFi will be part of our vocabulary.
Yeah, I think what's happening today is we work, for example, with a dozen companies that have the banking offering. So if you think of companies like Revolut and others, but not those newbie, right? New fintech companies that want to marry both the corporate or traditional retail banking services with crypto offering. And we basically enable them through our APIs to offer the full suite of buy coins, store them and earn interest, or take a loan, all that married with the traditional banking services. So that hybrid offering, I think, is the next wave of innovation, where that's the easiest way to transition people from the existing banking world, from Bank of America or whatever, to this hybrid version, and then maybe they will be ready to move to full DeFi, because DeFi is very easy maybe for the people on the panel here because we are crypto savvy. But for the average person to land on Bitcoin or land on Ethereum as like the first thing they're going to do is too hard. So stablecoins are a great solution. I agree with that. And earning, like we pay 8% on stablecoins, right? On USDC, for example, which is your dollars, right? Earning 8%, 8 times more than JP Morgan. So that's an easy value proposition with a bank account, with a credit card, with everything else you get. So for example, Mode in the UK offering it right now. You can download the app, have your bank account, have your credit card, and have all the crypto services powered by Celsius Network. So we're seeing that more and more. We're doing the same thing in partnership in Japan. We're launching that in Germany. And I see that coming out much faster than full DeFi or the banks offering it.
Yeah, because I would imagine there's some challenge there, especially in the Western, more developed banking systems with trying to integrate.
Challenge is understatement.
Understated.
You're not welcome in a bank. I recently, Bank of America canceled 2 of my credit cards because they discovered that I'm crypto heavy. And I've been with them for 20 years. So these are, and I have almost perfect credit score, right? It's not, so when you see these kind of actions, you basically say to yourself, come on. So the old banking world, the centralized systems that are hardened and are here to just extract value from the customers, are going to fight this tooth and nail because they have a license to print money. Right. And they're being replaced or disintermediated with a decentralized solution that does not require any of them to be part of the equation.
Or it might behoove them to integrate that into their system or to embrace the fintech aspect of it.
They will fight till the end, until they have to sell all these big buildings outside here. So.
And I think it's Angela Strange from Andreessen Horowitz that said something which is quite interesting in this aspect. She said that every company will be a fintech company. And so you look at the tech companies like Uber and Lyft, they're already providing banking services for their drivers, for their clients. The thing is that Uber and Lyft can do that because obviously they're big companies and they have resources. But in the future, with technologies like blockchain, with DeFi, any company, any tech company will be able to provide those kind of financial services to their own clients. And so that's where the potential is. It's not only on the crypto space, not only on the banking and financial space, but it's in every company. Yeah,
and I agree with you. That's a part I'm excited about, is the technology that underlies all of this, because it's not even just financial services, but any industry can adopt a lot of the technology that when we talk about banking.
Look, we're not even 2 years old, right? We've got over $700 million worth of deposits from people all over the world. We paid $11 million in interest. These are numbers, you could never do that in the old world, right? And in 30 years of fintech innovation, show me one fintech company that actually disrupted a bank, right? We failed disrupting the banks. They got bigger, more centralized, more powerful. So the blockchain is the first time we actually have an opportunity not to disrupt the bank, but replace the bank with a completely different ecosystem. And that is really that's why I'm so passionate about it. That's why everybody's working around the clock to really build that, because that's what our kids want to see. They're not going to want to work with one of the existing banks. So it's on us to deliver that.
All right, let's talk about cryptocurrency and Bitcoin in particular. I know the three of you are certainly bullish on Bitcoin for 2020. We'll get into halving in a bit, but with the performance that we're seeing in the market, it's been a volatile, it's February 26th for those of you catching it on the replay, but Monday, Tuesday, even Wednesday today, the moves that we've seen with, multiple 100-point swings. How is Bitcoin and some of the other cryptos trading, relative to what we're seeing in the equity and bond markets?
So I think when we talked about this last year, we talked about the Iran drone strike, and we talked about how it behaved sort of like a safe haven, almost like a hedge during that time. Well, it obviously hasn't behaved that way this week, and I think the mistake is to take that short-term sort of seeming correlation there and then extrapolate that over long periods of time and say something like Bitcoin's not a safe haven asset, it's not a flight to quality asset, all of these things. We don't really know how Bitcoin's going to behave over the next decade or two, and if you look back historically, even gold hasn't behaved in the same manner each and every crisis. And so I think people who are on Twitter basically saying they know exactly what this means and that Bitcoin can't be this or that, I would say it's too soon. What we do know is that it's not been correlated consistently with any other major asset class, and I think in the long run that's a really good thing for holders of Bitcoin.
The way we see it with our clients, most of our clients are institutions, but they're not exposed to the equities market. They trade on the Bitcoin, on the Bitcoin asset class, the cryptocurrency asset class, and that's all they do. And rather than seeing it correlated to other asset classes, I think 2017 was the year of speculation, but 2020 is the year where cryptocurrency have an actual use case. And this core use case, and we see that more and more, it's on payment, cross-border payments. We have clients that consistently every day they buy, sell cryptocurrencies to do cross-border payments from one country to another in a peer-to-peer fashion. So the purest, meaning of what a cryptocurrency is. And we see this use case being more and more used, especially in Asia, more and more in South America now. And our clients come to us to ask for capital market services, and we try to provide that whatever the price.
Yeah.
Yeah, I would say our community, we have 75,000 users from all over the world. We see them buy more when prices go down. So actually, they're a hodler community. So we went through several of these cycles, and we were expecting a lot of withdrawals. But what we're seeing is them buying additional Bitcoin, Ethereum, and so on. But the price movement itself is really, I think when there is fear, you see people withdrawing their asset. They're withdrawing them from the stock market, they're withdrawing from cryptocurrencies. So the coin does not have yet enough diversification in the user base to act as that non-correlated asset. So over a long period of time, you will see that non-correlation. But for the short term, you would see it run together with the stock market, run together with the gold market, and so on. So I think Bitcoin is a doomsday insurance over the long term, but on the short term, it has yet to prove to be the non-correlated day-to-day asset that we all think it is, right?
Yeah.
So you cannot measure it in a one day or a week or even a month.
Well, it doesn't have that much history, too, relative to
11 years, that's plenty of history.
Yeah, but
there's a lot of things behind us here who are not 11 years old. So,
well, that is true.
So you don't need that much time to prove what you are, right? It's up 9 million% in a decade.
I'll take that.
That's better than any of the companies here by a factor of 1,000. So it's proven itself as a store of value. It has not proven itself as an insurance policy or as a form of payment.
And to me, one of the best things about the volatility this week is we finally can get off this whole narrative about whether the halving is priced in. I was honestly getting pretty fed up having to talk about that over and over again. And I think if you look out maybe a year or two from now, that's when you should expect to see that impact come. So it doesn't really matter to me whether the Bitcoin halving is priced in, right? We do see over the last two halvings that the sort of impact is more muted. But over 18 or 24 months, there's an absolute impact to lowering the total supply of Bitcoin that's out there. And again, if you're focused on the long term, now's a great time to be accumulating. Like here, down here under 10,000, I think it's going to look like a great value when you look back on this 24, 36 months from now.
Yeah, I remember last time you and I spoke, you thought that it could potentially get to 30, 35,000
Yep.
over the next year.
I think Alex might agree with me.
Yeah,
I predicted 30,000 by the end of this year, but we're first going to see a dip. We issue loans, so we've issued hundreds of millions of dollars of loans. A lot of them went to people who don't want to sell their Bitcoin now, right?
But they're using that to buy more.
Exactly. So that is already all priced in, meaning that getting to 10 or 12,000 recently was all of that movement. That's already all priced in, and that's all leverage. It's not new people coming and buying. So a lot of that is we're going to have to give back maybe 50% of that. So if you look at 14,000 to 7,000, which was the range, we are very close to that support level of 50% retrenchment. and then we should be able to see, as supply actually is reduced by the end of May, towards the end of this year, I agree it's going to take a month or two to flush through all of this. So by June, July, you're going to start seeing that real new buying and all of these loans
And that's the key point. It's not a moment in time, right? So if somebody's expecting to cause a price spike on the day of, they're going to be disappointed. Yes. But over the month, 2, 3 months after that, as the market starts to digest that decrease in supply, you really should see some changes in the market dynamics.
It's not an earning announcement.
No.
But that's why having panels like this are so helpful, because I'm sure, especially in the Twitter universe, as you have said before, that everyone has that expectation as soon as it's done in half, all of a sudden the supply and demand dynamics are going to change, and there's just no level of understanding around that.
Right. Yeah, and if you look at I'd say the largest impact of the halving, it's on miners, right? So people that mine Bitcoin on a daily basis, they see their revenue being halved, in practice. And, some miners they've planned that, and so they have a mattress of safety and they can last long, but they can only last so long, right? And so you might see the effect of this happening, in the next few months, with miners selling their stake and, having some price action on Bitcoin. But that will take time, obviously.
But we can't have this all be just about speculators, right? Today, most of this movement has to do with speculators buying or selling. We need actual day-to-day use cases. And DeFi is a great use case. Again, an insurance policy, right? Doomsday insurance policy, non-correlated asset is a great use case, but we need more of those, right? And that's part of what the community is working on. There's over 2,000 projects, 17 billion of investment from venture capital and ICOs and so on, that is going into finding these killer apps, or killer dApps as we call them, right? Distributed applications. And again, we think interest income is the simplest one. 7 billion people need interest income.
Yeah.
Right? So why go for the hard stuff if you can do the easy stuff?
Right, especially as managers are looking to alternative assets at this point, because traditional asset classes, either they're overvalued or they're just like deriving the interest, as you had said before. I'm surprised we're actually not seeing more for that reason alone.
Well, most of the guys on Wall Street are looking for alpha from stock appreciation.
Right.
I'm just talking about simple interest income. I deposit, I earn interest, I withdraw, right? So that product is not available. Try to go to your bank and ask them for 5, 6, 7%.
Right.
Yeah, a whole generation doesn't even know what that is. So we got so used to the fact that we're either going to get it from the bond market or we're going to get it from the stock market, that the foundation of the banking system was taken away from us. And I'm saying the opportunity with the blockchain, the opportunity with DeFi is to deliver that yield. And the good news is finally we have a lot of competition now, which means that somebody is listening.
Right.
So
well, competition is a great thing. In your
I know.
space.
I'm saying finally. Like for a while, I was sitting there by myself talking about it, and I wasn't sure if I was crazy or everybody else was crazy. But now everybody is on it. Great, interest income. Let's deliver that. So, and that's why the communities are growing so fast, right? Like you are seeing. Not just us, but a lot of other providers who are delivering that yield, attracting a lot of both customers and deposits, which is growing the community. You grow the community, the value of Bitcoin is going to go up, the value of Ether is going to go up, everybody benefits.
And that was my next question. What else besides Bitcoin that you're seeing the traction in, or where that same value lies?
In our case, we're extremely bullish about stablecoins, and you were mentioning that before. And I think stablecoins are, it's a double-edged sword, because it can be an instrument of financial inclusion, right? It can allow unbanked people to have stable value on their smartphone. That's, projects like MakerDAO, you have that, and it's very, very interesting. But on the other hand, if it can also be a great threat to the privacy of users, and it all depends on how this underlying stablecoin is issued, because obviously with a stablecoin, you have full transparency on everything that anybody does, and you can have, if you have a centralized entity that issues this stablecoin, this centralized entity can choose whether or not to process this payment or this payment. So there's a wide spectrum of what you can do with a stablecoin, and the key is how you implement it. And the reason why we're so bullish about that, you mentioned there's no killer app. I think there is a killer app for crypto, and this killer app is payment. And you look at cryptocurrencies, they're currencies, virtual currencies that allow people to exchange in a peer-to-peer fashion without intermediary. Well, a lot of people are already using Bitcoin and Tether, for instance, in Asia, to do those kind of things. You're in China, you want to pay someone which is in Colombia, you're not going to use the traditional banking system. going to cost a lot of money, and it's going to be very, very expensive.
It takes a long time too.
Yeah, it takes like several business days.
Yeah.
It's working capital at the end of the day that you cannot use for your business. So, you know, the use of digital currencies for payments, specifically for cross-border payments, this is the killer app. And we see that today with, you know, all of our clients, most of our clients use that as the basis of their business. And I think there's going to be a lot of growth in 2020, 2021, especially in the remittance industry and the use cases which are associated and you know, solved with digital currencies.
Yeah, the banking for the unbanked and underbanked, I think, that's a story that's happening right now.
Well, today our average account is $23,000, so it's definitely not the underbanked or unbanked. And if you look at the industry on average, you will see that it's the bigger wallets that got more and more Bitcoin. It's not a lot of small. The long tail is not here. So we are still, it's an echo chamber of maybe 20 million people out of 7 billion people that is using this currency, right, called Bitcoin or Ethereum or whatever. So I think we need to break out of this use case. Again, what we talked about here does not apply to every person out there. They don't even understand what we're talking about. So we need to simplify it so it's as easy to use as it is a bank app, right? There shouldn't be any difference between using an app from Bank of America or using Celsius, right? And adding those things is hard, but a lot of these coins are moving from proof of work to proof of stake. And proof of stake is something that naturally pays yield. Like Ethereum is going to pay a 5% yield after Ethereum 2.0. There's another 15 other coins that are proof of stake. And those are yield generating assets, right? And they are things that can really act as utilities to pay people money on their money, right? That's the opportunity.
So speaking of the big banks, like if you look at what Warren Buffett said on CNBC, right? Like that is a fundamental mental block that I think is a real blocker to mass adoption, because you have all these investors that call themselves value investors who can't understand why they should buy any of these assets, why they should buy them at all, right? And so I don't think we can change Buffett's mind. I think he's a little bit too old and a little bit too set in his ways, but we do need to come up with fundamental valuation frameworks that make sense to a cash flow investor, that make sense to a traditional value investor. Otherwise, you're gonna have a whole segment of the traditional investor base that just doesn't participate, right? And so like if you look at Berkshire, they own Bank of America, they own JP Morgan, they own billions of dollars of each of those banks, and they just bought Amazon last year, right? After it had gone over 2,000.
Despite Warren Buffett's.
Right, and so if you're looking for Buffett as a leading indicator to tell us where DeFi is going or where Bitcoin is going, that's a huge mistake, right? Because they probably won't own Bitcoin until it's $2 million a coin. And there's cash flow models and valuation frameworks that make sense to a traditional Graham and Dodd type investment.
Yeah, I think the yield argument is what's probably the most interesting and attractive for sure.
It's an easy sell. Yield into stablecoin. It should be a no-brainer for all of us, right? And I think we all agree on it. It's just a question of how do we convince people from the outside to come and try it out and test it out. And when each one of us makes a decision, do I deposit money with the bank? Do I use a credit card? Or do I empower the decentralized community? That's what we should win, right? Against deposits with banks and acting in your best interest, right? In a decentralized way.
All right, 20 minutes flies by when you're having fun talking about crypto. Thank you so much, everyone, for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.